everyone. Welcome to Tobin Real Estate Talk, and today we're here with a special panel from Element Home Loans, Lane Barron, and from Vital Title and Escrow Company. We have Jackie Waldman, who's an attorney, her brother Stephen Waldman, who's also an attorney, and today we're going to have a panel discussion about a lot of questions that come into our companies that people are always looking for information on. So we want to try to provide you some quick and short answers. And you always have the opportunity to follow up either with Lane, Jackie, or Stephen after you see the segment for any additional questions or information that you might need, whether you're buying or selling a home. So welcome everybody. Thank you for coming.
Thanks, Louie.
Thank you.
So some of the questions that we received through our website, which is interactive, are from the general public. So we're just going to go through some questions here and try to give some brief answers to try to help them understand some of the different aspects of purchasing a home or selling a home or getting a loan on a home. And sometimes people are buying homes that are cash, so they don't necessarily need a loan, so the information might be a little bit different. The first question that came in is, how does a buyer estimate the expenses of their closing costs? So I think that'd be for Lane.
When it comes to a purchase transaction, when there's a mortgage involved, as a lender, we're required to provide a loan estimate, is the document's name. And in that loan estimate, we cover soup to nuts: costs for the loan, application fees, underwriting fees, appraisal fees, survey fees. We even go so far as to estimate your title fees in our documents, give the buyer really a best guess on what they're going to need aside from their down payment. Also included in there are like recording fees, doc stamps, and things of this nature. In addition, there's another category of costs we call prepaids. Those include their prepaid insurance for the first year, as well as establishing an escrow account for the future tax and insurance bills to be paid. Overall, in today's market, with today's average price being what it is, I would say you probably need somewhere between 3 to 5% to cover all of those fees on top of your down payment.
And say you're not taking out a loan and you're buying the property cash, we're also able to provide the buyer with an estimate of closing costs, different costs associated with the transaction without a loan.
Next question is, and we get this a lot, when does the contract inspection period actually begin? Does the effective date of a fully executed contract count as the first day of the inspection period?
The effective date controls everything. It is the start date for absolutely every deadline that there's going to be in the contract. So every period that has a time frame, you start it always at the effective date and it ends at the expiration, whatever that may be, 15 days, 10 days, whatever it is. The only thing that would ever change that is if the buyer and the seller both agree, sign an addendum stating that a certain deadline would be controlled by this addendum. So if they want to extend the extension period, they're able to do so by addendum, but otherwise it always starts at the effective date.
Another question, a little bit more complicated, is can an individual purchase a home in an LLC?
They definitely can. A buyer can definitely purchase a home in an LLC, especially where you're paying cash for the property and you're not taking out a loan. There are really no issues with that. There are certain exceptions that are involved in nuances. So if you're looking to obtain a homestead exemption and it's going to be your primary property, you might run into an issue there as far as being able to qualify for that. If you own the property under an LLC, but you are able to purchase a home in an LLC. Where there's a loan involved though,
Right.
Lane might want to talk about.
A little different. So the agencies, that being Fannie Mae, Freddie Mac, FHA, and VA, they will not allow you to take title in the name of an LLC when you're securing a mortgage. However, there are some alternative loan programs that do exist today that will allow you to take the title in the LLC.
Next question is, can you explain the importance of a survey and what an easement is on a survey?
Absolutely. I'll start with an easement. An easement is a non-possessory interest in real property. And the example I'd like to give is FPL. They have a right basically to run wires across your property, so they don't possess your property, however, they actually have an interest in the property. A survey is basically like an aerial blueprint of your property, including your boundary line. It'll disclose all of the easements that affect your property. It'll map out exactly what areas are encumbered, and you may not even be able to make use of those pieces of property. The survey importance is, with regard to title, there when we receive a title commitment, there's going to be an exception for all survey-related matters. They'll remove that exception from coverage if we provide them with a survey, or if the seller has a prior survey and signs a survey affidavit basically certifying that no improvements have been made since that last survey. Once that's removed, you're insured and protected against all boundary disputes. Let's say your neighbor has their fence on your property. Your title company then has to protect you against all claims regarding those boundary disputes.
Also, not to mention that when you are purchasing a condo, there is a difference. Condos aren't typically going to require surveys of any kind. This is really for single family homes. This is for that type of residential, as well as for commercial, is always very important. In addition to that, though, your lender, where you're pulling out a loan to finance the property, is going to always require a survey no matter what, not though if it's a condo.
Surveys are super important, especially if you find out there's an easement running across the middle of your property, and you would have never known it if you didn't have a good title company doing your survey work and review. So really important. Lane, next question is, what is required from a buyer, and how long does it take for them to obtain a pre-approval letter?
So that's a great question, and it's probably the beginning of where any potential buyer should start in the process if they need financing, right? Is to know, can I get a loan? What are the payments like? What are the costs like? And really, what's my budget going to be like? So what we need is we need to know a 2-year job history. So we're going to ask about employment, and we'd like to see documentation to support that. Pay stubs for the last 30 days, W-2s for the last couple of years. Only if you're self-employed do you need, or if you have investment income, do you need tax returns for the last couple of years? In addition to which, we're going to know your asset position. Where's the money coming from for your down payment and closing costs? So we'll want to see bank statements, 401k, stock accounts for the last 2 months. And then, of course, of utmost importance is their credit rating. So we're going to request the opportunity to pull their credit. We've streamlined the process as the whole world has gone technology, right? So we can do this online. If people are comfortable, utilize the technology and go online through our secure portal. They can fill out an application, authorize a credit pull, upload documentation. We've gone so far as to offer them the ability to link their asset accounts. We partner with just about every major banking institution across the country, so it streamlines the process. They don't necessarily have to provide us those bank statements or those documents. Big challenge for people often is the need to dig up all this paperwork. So we've tried to make that better for them. We've even gone so far as to link verification of employment software with major payroll companies and companies across the country too. So that streamlines the process, which leads to the second part of your answer, how long does it take? Generally speaking, I'd like to have a conversation with the client up front first to understand what they're about and what they're looking for. Then direct them to the website, they fill that out. If that comes back to me on a Monday, by Tuesday, we're having a conversation about their approval or what they need to do to get pre-approved. So it can be a very expedient process.
Really important, because a lot of times anymore today, even sellers want to know that the buyers have pre-approval letters before you submit the contract.
To be honest, if the buyer doesn't want to provide or do all those things, then how serious really are they? And how can you take them out to see property when we don't even know where they're going to be from a pre-approval perspective?
Correct. So another lender question came in, and it has to do with appraisals. And the question is, do lenders always require an appraisal when you're getting a home loan?
Every mortgage transaction does require an appraisal be done. Any loan approval will have a condition to the approval of a satisfactory appraisal meeting at least the contract price or above. There are instances where with technology today and automated underwriting, those systems can offer a waiver of an appraisal to a borrower, but it's up to the borrower to say that they're okay with that. They'll sign a release form that they did accept that, and then we can move forward without having an appraisal done. It's rare, but every loan approval will have a condition for a satisfactory appraisal be done. Despite the down payment, a lot of people think with a big down payment, we don't need one and it won't matter, but a low appraisal, even with a large down payment, could impact the loan to value, which could impact the pricing of the loan, which then could impact the borrower's ability to qualify.
Does my credit score make a difference on the interest rate I get on my mortgage?
Yeah, in a lot of cases it does. Most interest rates, in fact, all interest rates for the most part, are priced according to layers of risk. And one of the biggest risk factors is credit score. So your conventional loans are priced according to credit scores, and those credit scores get broken down into tiers. Anything above 760 is considered the highest tier, and then they go down in like 20-point increments where premium can be added to the cost of that rate on the conventional side of things. In conjunction with loan to value, property type, transaction type, all of these factor into how an interest rate's priced, but credit score is one of the big ones, and it most definitely can impact the type of financing you'll be able to get aside from the rate.
And I think it's important too that when you're representing somebody and they're going to go through the loan process and you know that their credit's going to be pulled for the loan, don't go out and charge a whole bunch of things on your credit cards, and don't buy a new car before you're getting ready to do a loan, because it's going to impact your mortgage, and it's a 30-year commitment. So just wait until you get your mortgage and then consider those type of purchases after to take advantage of the great credit score you might have. What is the estimated cost to prepare seller documents when you're selling a home?
Typically, you're looking at anywhere between $500 to $1,000, give or take. It really depends on what the title commitment comes back and says. And, there are certain standard documents that are involved with every transaction. You're going to have the deed, the bill of sale, the no lien affidavit, things like that. Sometimes, though, a title commitment will come back and there will be additional documents that are required in order for you as a seller to transfer the property. And what those documents might require are additional work that wouldn't be required necessarily by the standard documents. So that's when you're looking at the higher number for that estimate. But typically you could be anywhere between 500 and 1,000. The title commitment may come back, and there may be some requirements, for instance, to close out open permit or a notice of commencement on the property for work that was done. So, we would have to go then and prepare the termination. We would have to work with your contractor in order to close out those documents, marital agreements that might need to be reviewed and things of that nature, death certificates, anything that goes beyond a non-standard document in order to transfer property. You'll be looking at the higher end of that estimate, but I would say, to be safe, probably anywhere between $500 and $1,000. So really anything that goes beyond a standard document would be where you're looking at the higher end of that estimate.
I think it gives a seller a good idea of the range of what it's going to cost them, because even though you're selling a property, you still need a title company, a closing agent to prepare your documents for you. It's important for people to understand that. It's just not as complex as when you're the buyer.
Well, right. And for instance, the buyer, they don't have the burden is not really on the buyer in that sense to make sure everything's okay with the property. That's our job as the title company to make sure, and the closing agent to make sure that everything's okay with the property. But we are going to need sellers' help if there are any issues that come up, or if there are any issues that arise, if there are, we need to record satisfactions of their prior mortgages and things like that. So we essentially will work with the seller in order to be able to provide to buyer clean and marketable title.
The last couple of questions have to do with title evidence. Some of the confusion has to do with title commitments and title policy. A lot of people don't understand those two components of a transaction, even whether you're on the buy side or you're on the sell side.
Sure.
So maybe you can explain the title commitment and title policy.
Sure. When we go ahead and order a title search, our underwriter provides us with a title commitment. It's similar to a loan commitment. It basically just outlines the terms. It gives us B1s, which are requirements that we have to comply with, that all parties to the transaction have to comply with. And it gives us B2s, exceptions to your coverage. Those are things that are not included in your coverage. What we do is we work with the underwriter in order to remove all of as many of those exceptions as possible. There are standard exceptions that things like the no lien affidavit will deal with, things like the survey will deal with, due diligence will deal with, and the underwriter will accept those documents and remove those exceptions. Basically, once closing comes around, we drill down on the title commitment, we remove as many exceptions as possible, and then a policy is issued from the commitment. So the title policy is basically the final product. The commitment is what you get at the beginning of the transaction. The title policy is what's issued.
And the final question that came in is, on the buyer side or the seller side, is it better to have a statutory warranty or a special warranty deed? And what is the difference between the two?
On the buyer side, it's more favorable to obtain a statutory warranty deed. On the seller's side, it's more favorable to provide a special warranty deed. The difference being a special warranty deed provides representations and warranties regarding the property only for your term of ownership. A statutory warranty deed provides those same representations and warranties, except from the beginning of time. That's why, as a buyer, I want a statutory warranty deed. I want protection from the beginning of time. As a seller, I don't want to give that protection. I want to limit it as much as possible, and that's why I provide a special warranty deed.
It's good information because it's on every contract. And a lot of people don't really understand it. There you have it. We went over a lot of great questions today, got a lot of great answers. We're really happy to have Lane, Jackie, and Stephen here with us today. So the critical thing that should come out of this for you is that it's extremely important and vital to have the right title and escrow company, and it's extremely important to have the right element with Element Home Loans so that you're protected and you have a very smooth transaction. And here at Tobin, we partner with these two companies because they provide exemplary service, and we've closed millions and millions of dollars in transactions with both of these companies, and the process has been very smooth. And most important to us here at Tobin Real Estate is that you as a client is treated with the highest quality of services you can get. Your process is smooth and seamless, but then you have companies like Vital Title and Escrow and Element Home Loans that when you call them on the phone, you either get them on the phone or you get a call back right away to answer any of your questions or concerns. And that is very critical during a real estate transaction because it's one of the most stressful processes you'll ever go to. There are a lot of components to it and a lot of pieces that have to come together, and it's important to have the right team. So Tobin Real Estate, we're happy to partner with them, and just remember, tested, trusted, Tobin.